Thanks for tuning in to this week's news recap. For those of you watching on video, I apologize for the lighting where I am as I'm on the road, and so I'm just making do with what I have. Russia's move on Ukraine shocked crypto markets. The market capitalization of all cryptocurrencies slid roughly 10% in the hours after news broke that Russia had launched a military operation in Ukraine. The crypto markets dropped from a high of around $1.76 trillion to a low of about $1.58 trillion between 11:30 a.m. UTC on Wednesday and 1:30 a.m. on UTC on Thursday. Liquidations were also severe, with over $860 million in positions wiped out in the 24 hours between Wednesday and Thursday afternoon, 3:30 p.m. Eastern specifically, making it the largest liquidation event in February. According to the block, these liquidations could more than double if the price of ETH falls below $2,100, which would result in an automatic liquidation of $500 million in ETH if the positions of 7 siblings, a large Maker Vault holder, are not recollateralized. That being said, following an announcement from U.S. President Joe Biden of sanctions against Russia, Bitcoin rose by more than $4,000. Russia's decision to enter Ukraine was met with vociferous opposition by some of the biggest names in crypto. Very upset by Putin's decision to abandon the possibility of a peaceful solution to the dispute with Ukraine and go to war instead, wrote Ethereum creator Vitalik Buterin, who also added that the invasion is a crime against both the Ukrainian and Russian people. Digital currency group's Barry Silbert was even more upfront, tweeting, "Fuck war." Mimo Capital begins internal investigation of Toby Hoenisch. On Tuesday, I published an article on Forbes describing how, in the course of reporting and writing my book, The Cryptopians, my sources and I found the person that we believe is the 2016 DAO attacker, Toby Hoenisch, who denied it in an email. Afterward, his new venture, Mimo Capital, expressed surprise at the result of my investigation, but also said it was conducting a new investigation into Hoenisch using a third-party firm. Out phishing. 17 OpenSea users lose NFTs. 17 OpenSea customers fell prey to a complex phishing attack on Sunday morning. According to an internal investigation completed by the NFT marketplace, the attack was not specifically connected to OpenSea emails, domains, or its official website. Overall, the attack took place across 15 hours, during which thousands of dollars worth of NFTs were stolen. In a tweet thread recapping the phishing scam, OpenSea CTO Nadav Hollander explained the scam was most likely a targeted attack as opposed to a systemic issue regarding a contract upgrade on OpenSea that tricked users into signing a malicious smart contract. Going forward, Hollander is confident that phishers will have trouble executing similar attacks because OpenSea is adding EIP 712 to its new contract. This upgrade will improve the security of signing off-chain messages, such as signing a message to join a waitlist, raffle, or token-gated Discord group. Hollander also noted that OpenSea would be helping victims of the attack, even though it stemmed from outside the NFT marketplace. Speaking of OpenSea and buggy code, a complaint filed by Timothy McKimmey in Texas federal court claims that he is the rightful owner of Bored Ape 3475, despite Ethereum's blockchain showing that he sold it for 0.01 ETH earlier this year due to an alleged bug on OpenSea's website. In his suit, McKimmey is asking for the return of his NFT and damages over $1 million. He is accusing OpenSea of negligence and breach of contract. The current price floor for a Bored Ape Yacht Club NFT is somewhere around $200,000. China outlaws crypto fundraising. China's Supreme Court ruled that raising money from the public via digital assets is illegal, according to a statement released on Thursday. While China has banned crypto in the past, this new ruling allows China to officially charge digital asset fundraisers with criminal sentences and jail time. Luna Foundation Guard buys Bitcoin to back its stablecoin. The Luna Foundation Guard announced a $1 billion token sale of Luna, the native token of Terra, a smart contract blockchain specializing in stablecoins. Do Kwon, the founder of Terra, described the $1 billion raise as the largest ever cap formation in crypto. Investors who participated in the sale will see their Luna locked on a 4-year vesting schedule. Luna Foundation Guard, LFG for short, because crypto, is a nonprofit organization focused on supporting Terra and UST, the largest stablecoin on Terra and 4th largest stablecoin by total market capitalization writ large. Notably, proceeds from the $1 billion Luna sale will be used to purchase Bitcoin and create a Forex reserve, available to tap during times of extreme market volatility to keep UST's value pegged to the dollar. According to a thread by Terra, the move is designed to assuage concerns regarding a crypto bank run scenario, and Bitcoin is the ideal asset for such a plan. Although the widespread adoption of UST as a consistently stable asset through market volatility should already refute this, a decentralized reserve can provide an additional avenue to maintain the peg in contractionary cycles that reduces the reflexivity of the system. The UST Forex Reserve is an LFG initiative to provide a further layer of support for the UST peg using assets that are considered less correlated to the Terra ecosystem, like Bitcoin. In addition to the Terra news, a judge in New York ordered Terraform Labs, the development firm behind Terra, to comply with an investigative subpoena into whether Terraform Labs had violated U.S. securities laws via Mirror Protocol, a synthetic asset DeFi platform. Kwon, who is also the CEO of Terraform Labs, initially pushed back against complying with the SEC and had filed a separate lawsuit against the securities regulator. BitMEX founders plead guilty. Arthur Hayes and Benjamin Dello, founders of and executives of the crypto exchange BitMEX, pled guilty to violating the Bank Secrecy Act on Thursday, which carries a maximum sentence of 5 years. A press release by the U.S. Department of Justice listed their transgressions as willfully failing to establish, implement, and maintain an anti-money laundering or AML program at BitMEX. Both Hayes and Dello will pay a $10 million criminal fine. Canadian regulators are not a fan of self-custody. According to a report from the Leader Post, the Ontario Securities Commission contacted law enforcement agencies regarding tweets from 2 prominent crypto CEOs, flagging the comments because the regulator felt the executives were offering advice on evading sanctions. The news comes after Canadian law enforcement asked Canadian crypto trading platforms to freeze assets associated with a list of cryptocurrency addresses involved in sending funds to the Freedom Convoy trucker protests. The flagged tweets came from Coinbase CEO Brian Armstrong and Kraken CEO Jesse Powell. They recommended that users concerned about government seizure move their assets off of crypto exchanges to self-custodied wallets. In response to a comment asking if Kraken would comply with authorities to freeze accounts, Powell had this to say: 100% yes, it has/will happen. And 100% yes, we will be forced to comply. If you're worried about it, don't keep your funds with any centralized, regulated custodian. We cannot protect you. Get your coins or cash out and only trade peer-to-peer. As for Armstrong, he simply professed agreement with his fellow CEO, tweeting in response to a question about Coinbase custody in Canada. I agree with @JustPow on this. Despite Canada's attempt to freeze funds associated with roughly 30 Bitcoin wallets, on-chain data shows that around 20 BTC have been moved since last week, with some of the funds ending up on Coinbase and Crypto.com, which, disclosure, is a sponsor of my show. As of press time, it's unclear if the funds were cashed out or whether crypto exchanges not listed as financial institutions in Canada would have to comply with Canadian law. Salesforce employees speak out against new database product. 2 weeks ago, CNBC reported that Salesforce, a top 75 company by market cap in the world, is working on an NFT cloud service. However, as with many NFT projects that hit mainstream companies, the software provider is being met with immediate pushback, this time in the form of 400 employees signing a letter objecting to the NFT initiative over environmental and scam concerns. Reuters cited one Salesforce employee who would quit if the NFT plan came to fruition and says the firm will be hosting a listening session about its future plans soon. Andrew Yang launched a DAO. Former presidential candidate Andrew Yang launched a DAO last week. Dubbed Lobby 3, the DAO's focus will be to advocate for Web3 policies in Washington, D.C. Unfortunately, ill-informed and poorly designed policy can prevent Web3 from reaching its full potential. That's why we're building Lobby 3, explained the website. Membership in the DAO will be controlled via an NFT with 3 tiers that will help operate the DAO via policy suggestions, speaker requests, and treasury decisions. The mint for Lobby 3 will go live next Monday. Sotheby's gets punked. An auction for 104 CryptoPunks at Sotheby's was canceled at the last second on Thursday night. 0x650D, the CryptoPunks owner, explained the cancellation on Twitter, writing, "Never mind, decided to hodl." He also posted a meme saying that he was taking punks mainstream by rugging Sotheby's. The value of the CryptoPunks had been estimated to be between $20 million and $30 million. Time for fun bits. NFTs are dumb. The only way to prove this is blowing up a car. To prove that the NFT space is full of really extractive zero-sum practices, as an artist called Shlomes told The Block, they decided to blow up a $250,000 Lamborghini. Somewhat humorously, the charred parts are now being sold as a collection of 888 NFTs in a supposed protest of crypto's get-rich-quick culture, as The Block reports. Shlomes told Fortune that the majority of the sale would go to fund public art installations. Thanks so much for joining us today. To learn more about me, my book, The Cryptopians, Idealism, Greed, Lies, and the Making of the First Big Cryptocurrency Craze, and my findings about who the likely DAO attacker is, check out the show notes for this episode. Unchained is produced by me, Laura Shin, with help from Anthony Yoon, Daniel Nuss, Mark Murdoch, Shashank, and CLK Transcription. Thanks for listening.